For years, Bitcoin has been called the future of money. But lately, even the most loyal crypto believers are asking a terrifying question. What if the future just ended? The crypto market is facing one of its biggest confidence crises yet. Prices are falling, regulation is tightening, and faith, the one thing that keeps Bitcoin alive, is disappearing fast. Could this be the start of Bitcoin's final crash? The one that takes it all the way to zero? The fragile foundation of faith, Bitcoin has always been built on belief. It's not backed by gold, governments, or cash flow. It is backed by trust, the collective agreement that it has value because people say it does. But that faith is fading. Institutional interest is shrinking, retail investors are exhausted, and the next generation isn't joining the crypto movement the way the last one did. Bitcoin thrives on momentum, and momentum is gone. Even among its most loyal fans, the tone has shifted from when moon to can it survive? The perfect storm. Several forces are hitting Bitcoin at once. Central banks have tightened monetary policy, draining the cheap liquidity that once fueled speculative assets. Higher interest rates make riskier investments, like crypto, much less appealing. Meanwhile, governments are cracking down. The US, the EU, and even developing nations are imposing stricter rules on exchanges, stablecoins, and anonymous transactions. The once free crypto world is being slowly pulled into the traditional system it was meant to replace. Then there's technology itself. The same AI revolution that's reshaping the economy is now overshadowing crypto as the next big thing. Investors who once poured money into digital coins are now betting on chips, models, and automation instead. Bitcoin is no longer the hot new revolution, it's yesterday's rebellion. The network effect in reverse. Bitcoin's greatest strength was always its network, millions of miners, nodes, and holders working together to secure the chain. But when prices fall, miners shut down, hash power declines. Transaction volumes drop. Liquidity dries up. It's the network effect in reverse. When participation falls, so does stability. The fewer people who use Bitcoin, the weaker it becomes. If faith collapses fast enough, there's no bottom. Bitcoin doesn't have a floor like a company does. It doesn't generate income or dividends. When confidence breaks, it can go to zero, literally. The bigger problem, no real utility. Bitcoin's dream was to become a global currency, but after 15 years, it's still not used for everyday payments. Its transaction speed is slow, its fees are high, and volatility makes it impractical for trade. Most people who own Bitcoin don't use it. They hold it, hoping someone else will buy it later at a higher price. That's not a currency. It's speculation. Even as Bitcoin struggles, central banks are building their own digital currencies, CBDCs, that could make private crypto obsolete. Could it actually go to zero? Probably not overnight, but the path there is clearer than ever. If regulations crush liquidity, if miners abandon the network, and if the next crash wipes out confidence, Bitcoin could shrink into irrelevance. It wouldn't need to vanish, it would just stop mattering. That's how most revolutions die, not with a bang, but with indifference. The bottom line, Bitcoin's biggest threat isn't government regulation or rival cryptos, it's apathy. Once people stop caring, the network dies and so does the dream. Crypto began as a rebellion against the system, but it's ending as just another speculative bubble. So can Bitcoin really go to zero? Maybe not today. But the fact that we even asking the question means the faith that built it is already breaking. If you found this analysis helpful, hit like, subscribe to Financial Vlog, and turn on notifications for more no-fluff breakdowns of markets, money, and technology's next crash.